Good morning and welcome to this weekly market update from MRC Markets. Today is the 11th of August 2014. What we'll do today is go through some technical analysis on Euro, Dollar, Cable, Dollar, Swiss, Aussie and Gold. Just to review what happened in the markets last week and give some sort of outlook for the week ahead. I'm not making any trade calls recommendations in this video. You do trade at your own risk. If you could please read our full disclaimer, which is on our website at www.mrcmarkets.com, that would be most appreciated. And for any new followers out there, we do have 3 moving averages on each of these charts. The red one's a 50 simple moving average, the purple is 100 simple, and the gold is a 200 simple moving average. Okay, then let's have a look briefly at the Forex calendar for the week ahead. So what sort of major news have we got coming out this week? Today, Monday, very quiet day on the data front. The only sort of highlight is from Australia, so that's at 9:30 p.m. This is UK time, so that's the NAB Business Confidence data. And then tomorrow, what do we have? So I just need to change the time actually on there to GMT. So that Aussie data is not 9:30 at all. So let's go back to that. Yeah, today there's nothing. I don't think there was. Yeah, and it's overnight tomorrow, so it's 2:30 a.m. Out from Australia is the NAB Business Conference, so keep an eye on that. And then tomorrow at 10 a.m. with the German ZEW economic sentiment numbers. So there's only one during this sort of the main European trading session. There's only one main bit of data, and that's out from Germany. And then on Wednesday we have some more overnight data, this time from China, so the industrial production year-on-year figures. And then at 9:30 we have the UK data, so the average earnings index, the claimant count change, and the unemployment numbers all out at 9:30. And at 10:30 a.m. we have Bank of England Governor Mark Carney speaking. Then we have the BOE inflation report as well. And at 1:30 we have the first main US data out for the week, and that's the retail sales month-to-month, and of course the core retail sales as well. So both of them are expected to come in at the same as previous there. Then on overnight on Wednesday, we're at 11:45 p.m. you have the New Zealand retail sales quarterly figures. On Thursday at 7 a.m. with the Eurozone German preliminary GDP quarter-on-quarter figures, expecting a much weaker number than previous there. So the previous was positive 0.8%, and the expected figure from Forex Factory is minus 0.1%. And at 1:30, the usual on Wednesday, the weekly unemployment claims out of the US, expected at 307,000. So 300,000 mark is the key sort of level there, really, for the weekly jobless claims. It's been on that for some while, to be honest. And on Friday, to round off the week, we have from the UK the second estimate GDP quarterly figure expected at 0.8%. And at 1:30 p.m. we have US PPI, and from Canada manufacturing sales month-on-month. And to round off the week, the last bit of sort of high impact data is from the US is the preliminary University of Michigan consumer sentiment expected at 82.7 there. So fairly standard week, nothing major. I mean, it'll be quite quiet, I thought, today. There's some interesting pieces of data, especially from the UK, really. Well, you can see there on Wednesday, and some interesting sort of Eurozone data actually. So yeah, it should be quite an interesting week. Let's flip it to the charts and see what is going on. So this is the Euro-Dollar weekly chart, and what have we been speaking about for some time is this move here. And that's the fifth low from 2013 low to 2014 high. And you can see last week's weekly candle, we had a piercing of the 50% and of the 100-week moving average, and it closed above the 50%. I think I do recall saying last week, if we do get a close above the 50%, then expect some sort of rotation towards the upside. But the thing is that, I mean, ideally you do want a green candle here, and it is a red one, and it is a close below the 200-week moving average. But I mean, I think the lower wick on that is quite decent. I mean, what I would not be surprised to see this week is a sort of slide below the 50% and then another close up, and then you may get a sort of bullish close. I wouldn't expect like an initial pop up here and seeing like a test of the 50-week moving average, for example. That, in my opinion, is not going to happen. I think you'll get another sort of retest of this 50% to form another lower wick like last week's candle. But but I do think we'll close above this. This 50% bit will be interesting to see, and of course it will be very data dependent as well. So that's the main move in terms of the weekly chart. And then of course the other side of the coin would be this fib here, but of course we're still a long way away from that. But in terms of sort of perspective and keeping things in mind, then that's the move. They're the moves to keep out for in terms of the weekly chart, I think. And in terms of the daily, the other things, I mean, you have that same move there on the weekly, but of course we're still a long way away from that. The other fib move though is of course this one here. So if we do get any bounce up, then keep an eye on that 50%. That comes at one spot 35.20s. That coincides with those previous lows there as well. So previous sort of support could turn into a new sort of resistance. In terms of sort of key levels that are currently in play and have been playing out quite nice, you can see last week that 133.50s was a key sort of support. You can see should zoom in a bit there. You can see three candles tested that level and posted high lows there, so a sort of nice bullish sign there. So yeah, I mean, it does look quite sort of bullish, really lovely sort of support the 133.50s, and of course that's the big 50% retrace as well. So key support there, and I think if we do get a pop up, which could happen this week, but of course you can already see that this week it's starting to sort of slide low already. So I mean, of course that's only a small retrace, but I mean, don't be surprised to see it come down here, test this 133.50s and reverse again, and then we may get a sort of rotation higher maybe next week. But 133.50s is definitely a key line in the sand for this week. And of course, in terms of 50 pip increments and sort of key round numbers, key sort of option expiry levels, you've then got 134, which is pretty much you can see is sort of slicing through that level at the minute. In terms of sort of shorter term time frames and sort of small fib setups, if you think it's going to go towards the upside, then one fib to keep it nice and simple, I think, is this move here. So that's pretty much the low of the chart, and the sort of forward to that sort of recent swing high. I mean, yeah, you could take that low there, but I think just to sort of play it safe, I'd personally sort of use that low there. So that 50% comes at one spot 33.82s. Then it sort of coincides with previous resistance around here as well. You can see around there as well, and also previous support to the pip on that 1 hour candle there, and it has the 50 SMA lining up with that as well. So interesting fib move there. I think that could be a decent one to keep an eye out for. You can also see I've just zoomed out here, previous sort of support around this sort of 50%, 61.8% area. So I definitely keep that in mind. So yeah, that's the view on Euro for this week. Let's flip it to cable. What's going on this weekly? It's just continuing to slide down, continuing to retrace. What we've been speaking about for some time is that, I mean, it's had such a strong uptrend. The odds of, in my opinion, sort of favour some sort of healthy retracement. It could come very, very quickly, and this is the fib to definitely keep an eye out for. Of course, we're still a long way away from it, but in terms of sort of context, this will be a pure fib level. If it does come down here, of course, it could still be months and weeks and months away. But reason being is that this 50% coincides bang on with the 160 level. So over the next sort of few weeks, next few months, I'd not be surprised to see it rotate down towards that. So this is the view on the sort of weekly chart. Remember, of course, we're not sort of intraday trading here. The other sort of fib move that I'd keep an eye out for personally is this move here. So that's the low of 2014 to the high of 2014, and reason being is because there's some interesting previous support at this level as well, and sort of previous resistance around there as well. So that 50% comes at one spot 67.20 21s there, so keep an eye out on that. So that's the view on the weekly. Keep it nice and brief, of course, because it probably won't change that much. But in terms of last week's weekly candle, pretty much a standard continuation pattern. Of course, it does have some upper wicks, so don't be surprised to see the start of this week pop up a little bit, and then sellers come back in, producing another upper wick. If it does retrace quite a bit on this daily chart, then the fib towards the downside is this one, in my opinion. That's the clear swing high. I mean, some people may be looking at these sort of ones here, but it's not very clear in my opinion. So that's the more obvious swing high. It's the high of July, and the 50% there comes at one spot 69. 79s. So I'd definitely keep an eye on that. And it's the same sort of thing, the 4 hour really. I mean, yeah, a lot of people maybe look at these sort of smaller dips there, and there's nothing wrong with that really. I mean, it's all actually keeping the sort of eye on the price action. I mean, that's quite valid actually on the 1 hour chart. If you zoom in there, it's pretty much the high of the 1 hour chart to the low. And interestingly, that 50% coincides. So this new Windows 8 is very annoying. You can see the 50% here comes at 1.6827s, and it coincides with previous support and previous resistance as well. So I mean, it has been selling off very aggressively. If you do look at this this daily chart here, and it's any sort of brief pop up has just got sold off. So maybe looking at those smaller dips, and there's nothing really wrong with that. And of course, it's the high of August as well, so nice sort of period separation there. I definitely will be keeping an eye out on that in terms of that 1 hour chart, purely really because that previous support and previous resistance, so it's just a key level anyway. So yeah, that's pretty much the view on cable. Nothing else major to look out for, I don't think. So let's move on to the dollar Swiss on the weekly chart. What's going on? It's still trying to grind higher, but you can see we are starting to stall at this level, and that level there, you can see where I'm hovering my cursor over, that sort of key swing low there from 2013, and that level comes in at the 0.90 70s there. So key sort of key intraday level to keep an eye out for, and key level definitely on this weekly chart. So we've had the last 2 weeks big sort of spike highs and closes below, so do not be surprised to see some sort of retracement here. And I've just flipped it to the daily chart because the fib to keep an eye out for, I spoke about this last week, it's still the same move. It's that low there, and the reason I'm taking that low is because that's the low of this previous fib bounce here, so it's just purely sort of playing the dips here on dollar Swiss. I think this will be a very sort of popular fib move. That 50% comes at 0.89 85s there, so, and it is starting to retrace already. You can see Friday's candle was quite a heavy one. You got of course the 0.80 71s, then of course the 0.91 handle has been a key in terms of the key round numbers. 0.91 key resistance there, and you can't get any sort of more pure and obvious here in terms of this daily chart. As I've zoomed in here, you can see how many candles here, pretty much 7 daily candles have tested this 0.91 level, closed below, and it's struggling to get up here. So I think a retrace is definitely on the cards here on this dollar Swiss for this week, and I think this fib will be a very interesting one. Purely, you can see there we have some previous resistance at this 50% level as well, so it could be a very interesting move here on dollar Swiss. And in terms of the shorter term time frames, I mean, I personally think as we're going to retrace down this week, I think it's quite wise to sort of look at any sort of small sort of bounces towards the upside. I mean, you had that sort of move there. I mean, it's not the greatest of fibs, but you can see we did sort of get sold off at the 61.8, but it's more about the 0.91 there. Other sort of fib moves to keep an eye out for, you can look at that fib there potentially. Or just keep it nice and simple with the sort of round numbers, the 50 pip increments. So you've got 0.91s playing out quite well. Check out 0.90 50s there as well as a sort of key support. But really, the key line in the sand for any sort of bounce up really is that 0.91 level. In terms of fibs, in terms of sort of 4 hour chart, you can see it a bit clearer. I definitely would keep an eye on that one personally, because I think it's going to sort of grind lower, so any sort of healthy pop up, that fib could be quite a sort of wise one to keep an eye for. That's nice and simple on the 1 hour chart. It's pretty much the high of the 1 hour chart to the low here, if zoomed in a little bit. Right, let's flip it to Aussie. What's going on the Aussie on the weekly chart? It's still in sort of retrace mode. We said about last week, I mean, it's been stuck at this the 0.94 50s level for some time now. You can see the multiple candle wick tests of that level. Last week's weekly candle, quite a bearish one, and sorry, that was the previous week's one, was quite bearish. You can see last week's is sort of just continuation pattern. I mean, there is a little bit of lower wick on that candle, so don't be surprised to see some sort of a pop up at the start of the week and a sell-off later on in the week, creating another sort of a new higher wick on the candle. But in terms of the fib moves on this weekly chart, it's all about this one here, in my opinion, and that is the low of that fibs from the low of 2014 to the high of 2014. So nice uptrend, a lot of sort of consolidation, and I think it will just continue to retrace down, definitely towards this 50-week moving average, I'd have thought, and then even potentially towards the 50% here, which comes in at 0.9080s. So in terms of the daily chart, it's quite a tricky one, but I mean, we do have some interesting fibs that have been playing out, notably this one here, which played out last week. I think I may have tweeted that one. You can see it more clearer on the 4-hour charts. This was a nice sort of move towards the downside, retracement towards the upside, and pretty much to the pip there. That 50% level got tested, and sellers just came in and it went all the way down to the 0% level. So really technical stuff here. So the next move, if you're a sort of aggressive seller, I'd have thought a lot of people will be looking at that smaller move there. So that's just the high is from the bounce of that previous 50% and just taking the new sort of swing low there. So that 50% comes in at 0.9305. So a nice sort of confluence with the 0.93 handle as well, key level, key round number to keep an eye out for as well. Also it coincides with 50 SMA on the 4-hour chart as well, and the 1-hour chart you can see the 200 SMA as well lining up with that 50%. So could definitely be an interesting sort of fib move to keep an eye out for this week on the Aussie. And then of course, actually the other thing to keep an eye out for, I'm just flipping it back towards the daily chart, is this key support here, which we've been speaking about for a while. That's pretty much 0.92 level. Just keep it nice and simple, the sort of round numbers. I mean, it is a little bit of above, in terms of if you're taking the sort of the candle closes, it's around 0.92 17s there. So that's the key sort of support, which has been holding for some time now. So they're the levels on Aussie, really nice and simple. You've got the 0.9450s is the big sort of key resistance towards the upside, and of course, I mean 0.94s as well. If you're playing the round numbers, playing any sort of bounce or sort of intraday trading, the round numbers have been playing out very nicely on this Aussie, so there's no reason why not to have that on your chart as well. You can see previous resistance around there to the pip. But yeah, it's just playing the sort of pure levels, really. I mean, I do think the odds are for a move towards the downside purely in terms of the weekly chart. And then the daily chart, you've got those smaller fibs playing out quite nicely, the key round numbers. So Aussie's a very interesting chart at the minute, especially for intraday trading, I think. Right, and let's flip it to the gold. Gold on the weekly chart briefly. What is going on? Let's just zoom in here on the gold. So what have we been speaking about recently? It's been all about that small fib here. So we'll flip it onto the daily bit. In terms of just the weekly candle action, surprise, this 50% has been holding after that previous week's candle. Remember, we had the pierce below, well, multiple pierces of this 50%, but we did have a test of the 61.8% retracement, and it closed above the 50% just. And last week, surprise, we had a piercing below, a lovely green candle there, above the 50-week moving average as well. So odds are this week, over the next couple of weeks, that we'll get some sort of rotation towards the upside, I think, here on gold, and a move towards 1344. So that's what the bulls will definitely be looking out for here. So I've just flipped it to the daily now, so you can see it a little bit clearer. Remember that NFP day there? Remember we had it was a weak number, but initially came back down, tested those key 1280s, which have been support for such a long time. I mean, I'm just hovering the cursor over here to the left. I mean, key support, those 1280s, and it's just starting to rip higher now. You can see we've got daily closes above the 50-day moving average, so it's holding as nice support currently. I mean, you do have the only thing towards the bearish sort of moves towards the downside is the sort of is the counter move there, and it is technically currently holding. But I mean, there's a lot of lower weeks here, and I think this 50-day moving average will just be the decider here for gold, and I think it will continue to hold. I mean, bear in mind that last week's weekly candle is very, very bullish, so and we've sort of been holding these lows for some time now. It's a big double bottom there in terms of sort of weekly sort of cycle plays at 1200 there. Big support, and I think it would just continue to grind higher here and take out these sort of stops towards the upside, and then just sort of rotate towards those 1344s in my opinion over the next sort of week or two here. So do keep an eye on that. If we do get any sort of weak US data this week, then I personally think we could rotate quite quickly there. And in terms of sort of other levels, just keep it nice and simple. 1300's big support here. If we do get any sort of a mini retracement, I mean, I've just flipped it to the 4 hour here. If we do get any sort of retracement, I think that could be an interesting fib there. The 50% comes in just above the 1300s here, so it's 1301 spot 22. It does have some previous support there as well, so if it does continue to retrace down, which looks like it may be over actually in terms of these sort of these lower wicks on this 4 hour, then keep an eye out on that. But that's pretty much it on gold, and that's it for this week's video. I hope you found this video useful. If there's any other pairs you want me to take a look at next week, then feel free to comment on the YouTube channel or send us a tweet to our Twitter feed, which is at MRC_markets. Hope you have a great rest of the week trading, and I'll catch you next Monday. Thanks for watching.